FUBO TV stock, guys, is down almost 60% from its highs. Is it time to buy? That's the question I hope to answer in this video, so stick around. Hey guys, welcome back to the channel. Thank you so much for joining me for another video. I'm Richard Allen. We talk about stocks on this channel. And this is a stock I haven't talked about yet, but the more I learn about it, the more exciting I get. It's a streaming service similar to what? Roku or HBO Go or Netflix or whatever. But there's a key difference with FUBO TV. I found an amazing Seeking Alpha article that was just published today. And I want to share that with you guys because I think it's a fantastic look at the company. Now, the stock has beat down. And there may be some of you that bought at those highs. At one point, let's just look at the charts here. At one point, this stock was $62.29. That's what it got to on December 22nd. Now, some of you may have run that up and made a ton of money, but I guarantee you there were some people that bought in this range here. And that sucks. But I think this company has some fantastic prospects. I don't think this is a situation like Nikola, where the stock's just going to keep tumbling and go into non-existence. I don't think that's going to happen with FUBO TV, and we'll talk about why here. But again, I think this Seeking Alpha article is fantastic. It's a fantastic look at the company. I think this is the beginning of what could potentially be another run-up. Now, there is potentially a little bit more downside, but I think we found good support in this $23 range. And I think we're going to bounce from here, potentially back up to $30 per share. That's kind of what I'm looking at in the short term, but we'll see. Let's go over this article here on Seeking Alpha. Again, I think this is absolutely fantastic. Oh, so in summary, this addresses the recent volatility in the stock. FUBO TV is guiding out all the way to the year end of 2021. The market wants strong growth and visibility, and FUBO TV is offering this. Noting its unimpressive margin profile and why there's too much overreaction here. At just 7 times forward sales, I declare that this stock is very attractively priced. Okay, so let's just jump right into his feces. Let's jump right into his feces. Ooh, like Slumdog Millionaire. Have you guys seen that movie? So FUBO TV is a fast-growing live streaming platform. It has very attractive growth metrics, and it's a cheap stock, trading for just 7 times forward sales. Also, it has a poor profitability profile and a bear raid taking place. All considered, I argue that there's enough visibility to make this stock a strong investment opportunity for 2021. Talks about how there was 112 million shares from an as converted basis, implying that the present market cap is 3.1 billion. Then the market went really weird, the news of the lockup, and everyone lost their sense. Anyway, that's done now. What matters is what lies ahead. If I learned anything from the unprofitable multi-year investment in Discovery, is that you can have all of the content and free cash flow you want, but if you don't have the revenue growth, the market will not reward the stock with a higher multiple. In case you are not too familiar with Discovery, you may at least know some of its channels, such as Animal Planet, Food Network, and TLC. The point here is that with Discovery, there was attractive content, but there was no distribution, although this may change now with Discovery Plus. If you can't get into households, your brand won't carry much value. Indeed, what I wish to drive home is the opposite play with FUBO TV. Now, this is their growth. 42%, 58%, that's their paid subscribers. So they're growing very, very quickly. This is really, really good. As you can see above, the fact that the number of paid customers adopting FUBO TV was up 58% year over year. Now, I obviously know that there is starting from a small base, but there again, last year the figure was even smaller at 42% year over year growth. Thus, bears can't have it both ways. There's no need for any interpretation here. Facts are facts. This next section talks about their revenue growth as well. How many stocks does the reader know that have put out guidance all the way into the end of 2021 with 75% year-over-year growth rates? I don't know of many. So in this next section talks about valuation. Again, let's try to remain objective. It doesn't matter what anyone short lays claim to. The fact is that cord cutting is taking place. Netflix reorganized nearly 2 decades ago. Disney, Roku positioned itself for this. The Trade Desk, and finally, Discovery finally decided to join the fray. This is by no means an exhaustive list. I'm simply emphasizing that there's an underlying current taking hold and that FUBO TV happens to be well placed to benefit from this. What I wish to impress upon the reader is that I do not pay up for growth. If you have not read my work before, I'll let you know that I simply do not pay up for growth. That's not what I'm about. What we are presented with is visibility on the top line towards approximately $430 million in revenues for fiscal 2021. This implies that the stock is trading at 7x this year's forward revenues. How many stocks does the reader know that have visibility over the next 12 months, with 75% year-over-year growth rates being valued for just 7x forward sales? I follow many companies, and I lay claim that I may even follow more companies than those short sellers. I don't know of any company with such growth rates together with this low valuation. The bearish thesis doesn't dispute the growth rate. What they make their case on is a low gross margin profile that FUBO TV holds, and they give no weight to the fact that FUBO TV is such a small and rapidly growing enterprise. It appears to this author that when the facts don't align with their narrative, they spend little time considering them. Now, I don't expect a very attractive margin profile to emerge from FUBO TV. Indeed, I know that the Q3 2020, its adjusted margin contribution was a paltry 16%. He said he also acknowledges that this figure was elevated due to some of the one-off deals that took place. A more normalized figure puts FUBO TV's contribution margin at approximately 11%. This is truly unappetizing, and it appears that it's a case of revenues for vanity's sake rather than for profits. But wasn't the same argument made time and time again about Netflix? He says, in fact, even I made the same case with Netflix over the years. But now we know the market is more than happy to pay up for a sticker subscriber, particularly one that is able to raise their average revenue per user. Above, we can see that this is something that FUBO TV is succeeding with also. And this is the playbook that Disney is attempting to get into as well. This incidentally reminds me, isn't Disney a beneficial owner of FUBO TV? Look at who owns FUBO, right? Disney, AMC, Comcast, Viacom, Discovery. I mean, these people have a vested stake in the success of FUBO. And again, it's relatively inexpensive right now. It's relatively inexpensive. 7x their revenue for this year. So it says, the bottom line is investors are being offered a very compelling investment opportunity as investors got slightly distracted with the end of the year selling together with no less than 3 vocal short selling attacks. The stock, it created the perfect storm. However, I believe that over the coming year, today's valuation will look very enticing in hindsight. That was a lengthy article. However, I think it really gave us an idea of the potential of FUBO TV. One thing that was not mentioned by this author was the potential that FUBO has to get into sports betting. Now, the biggest thing for FUBO right now, let's just go to FUBO TV. If you look at it, look at this, right? Sports Center, live sports and TV without cable. So that's their biggest play right now, is the sports sector. They have 100 plus channels, live and on demand, and cloud DVR included. Now, yeah, it looks like 218 channels available in my area, and it's everything that I'd ever want to watch. Now, I don't watch a lot of TV, period. I watch some Netflix, we watch a little Disney Plus with the kids, but that's it. Not a huge sports fan, but I've done some gambling in the past, so that could be totally fun to do sports betting. But it looks like they may get into sports betting as well. And if that happens, the betting industry, the gaming industry on that end is really going to take off this year, because regulation is changing around this. And if FUBO can do that, if FUBO can jump in and set themselves apart with sports betting, it could be game over for trying to get this at $24 per share. So I've been looking at this for a long time. Obviously, I saw the run up that happened, and this could absolutely crush this year. Now, I don't know how much I'll be buying. but I'm pretty sure I will be buying FUBO TV. It's on my watch list this week for my 10K to 100K challenge for the year that I'm doing over on the Discord and the Patreon. And I will probably be buying FUBO TV. I just don't know when or how much yet for sure. But I really like the prospects of this company. I think we could easily see a $30 share price within the next month. And that would be a nice jump from where they're at right now. Let me know what you guys think about FUBO. Let me know if I'm missing anything about FUBO TV. Let me know if you're excited down in the comments. I would love to hear your opinion. Tell me if I'm wrong, please. I love that kind of dialogue down in the comments. And if you're interested in joining us over in the Discord, I communicate over there quite a bit, and I would love to have you over there as well. So please join us. It's patreon.com/I'm Richard Allen. I'd love to see you over there. But again, thank you so much for joining me for this video. As always, if you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.